Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Markets have brushed off the Nvidia result and chosen to extend their risk appetite. The S&P 500 is at another new record high, but bond markets aren't so sure this is justified. In the real world, US initial jobless claims were little changed last week from the prior week, both in actual terms and from what seasonal factors would have suggested. There are now 1.945 million people on these benefits, 101,000 more than the same time last year. And American second quarter 2025 GDP was revised slightly higher in its second estimate than the first, mainly due to a slightly smaller decline in investment. And pending home sales fell 0.4% in July from June, extending the 0.8% drop in the prior month to mark the first back-to-back contraction since January. They were down 0.7% from a year ago, as the American housing market seems to be in a long-term slow decline, never really having fully recovered from the pandemic period. And the Kansas City Fed factory survey was stable overall, but that was despite a fall in export orders and elevated cost pressures. There was a modest rise in August from July, but most metrics are still lower than a year ago. Earlier today, there was a much less supported US Treasury 7-year bond auction, 11% less in bid value. But the median yield fell to 3.87% from 4.06% at the prior equivalent event a month ago. And in Canada, they reported average weekly earnings were up 3.7% to $1,302 in June, following a 3.3% increase in May. And in India, industrial production there rose in July, and the pace picked up by more than expected. The expansion was 3.5% when a 2.1% was anticipated, and more than double the pace of June's 1.5%. In Europe, despite their inflation pressures being modest and on target, settling in at 2%, the overnight release of the ECB minutes revealed a split amongst policymakers on how to assess future risk. They left their policy rate unchanged, despite some thinking rates need to go lower to support growth and counter US tariffs, while others thinking the risk of future inflation is rising. Despite that split view, in the end the decision was to hold rates unchanged, and that was unanimous. Global container shipping freight rates fell 6% last week from the week before to be 16% lower than year-ago levels, although that year-ago base reflected unusual stress in the Red Sea shipping lanes. Once again, the recent falls are all to do with outbound trade from China. Interestingly, Chinese shippers are now targeting Australia and New Zealand, along with the Middle East, because of the higher rates they can get in these alternative markets. Bulk cargo rates are little changed week on week, but are up nearly 20% from a year ago. The US Treasury 10-year yield is now at 4.21%, down 3 basis points from yesterday. And the price of gold will start today at $3,415 an ounce, up $20 from yesterday. And American oil prices are little changed at $64 a barrel, while the international Brent price is still just under $68 a barrel. And the Kiwi dollar is now just on 58.9 US cents, up 30 basis points from yesterday. Against the Aussie, we're up 10 basis points at 90.1 Australian cents. Against the euro, we're unchanged at 50.4 euro cents. That all means our trade-weighted index starts today at just on 66.4 and up a net 10 basis points from yesterday. And the Bitcoin price starts today at $112,596 and up 0.2% from yesterday. Volatility over the past 24 hours has been modest, at just under plus or minus 1.1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.